Let's begin then by talking about Titan, and it's actually gold prices that have been soaring, fewer wedding dates, and that really seems to have hurt Titan's Q1 numbers.
Absolutely, because when you're looking at the numbers just in terms of the revenue growth, single-digit growth, and this is the first time since Q4 FY22 that we're seeing a single-digit growth coming in for Titan in terms of the consolidated basis. So yes, what they're reporting as a growth that came in from the company, just a 9% growth in the first quarter of FY25. Jewelry, which accounts for almost 80% of their business, that also has come in at just an 8% growth, and gold prices, lower wedding dates. That's the main reason that's impacted the sentiment in terms of overall the consumers buying because of the low gold prices, as well as the studded jewelry ratio. That's also seemed to have fallen. That's what the highlight that's coming in. The studded growth has moderately reduced for the company. Watches, wearables, when you look at that also, so in terms of the analog business, that's the watches side of the business, that's managed to see a growth of 17%, but the wearable side of the business has seen a decline of 6%. So that's also a considerable downtick, though premium products was the only thing that did well for the company in this segment. Eye care business, a single-digit growth, low single-digit growth. Taneira also a low single-digit growth of around just a 4%, as well as CaratLane, that's the only one that managed to see a growth of 18%. So clearly because of that, we're seeing a lot of impact that's coming in terms from the brokerage as well. JP Morgan has downgraded Titan to a neutral from an overweight, cut the target price to 3,450 rupees per share. A clear miss coming in from for most of the analysts as well, and that is why we're keeping an eye out on Titan. Not good in terms of the Q1 update that we're seeing.
You know, the numbers are getting hard to predict for Titan, even though you would imagine that, okay, there is a linearity which is coming back and, you know, things are looking up and two-wheeler sales are showing signs of recovery, FMCG sales are showing signs of recovery, but Titan, which in a sense has been ahead of the curve in terms of irrespective of what's happening to gold demand, these numbers do not show that kind of a sparkle or that kind of a shine. But, you know, judging Titan's future based on one quarter, I think may not be the best of the idea. These numbers may not ignite a lot of, you know, action in Titan. Titan in last 1 year actually has given flat returns, but that's largely because of the valuations and largely what's happening at least in the jewelry market in terms of competition. Also, a lot of market men who've invested in historically Titan, they've got this very original thought, which is that what is the future of jewelry, and especially diamond jewelry, given that artificial diamonds are now taking over. I don't think that narrative has hit the market yet, but that is something which you really need to be very conscious on, which really could have disruptive long-term impact in terms of how would you look at, you know, valuing Titan. So these numbers don't excite momentum, or they don't excite anything special which could happen to the Titan stock, at least because of the update.
Yeah, sure.
If you like this video, then like, share and subscribe to ET Now.